Welcome everyone to Vested Interest. This is Shane back again for their Stock Pick of the Day video. It is Thursday, April 18th. This will be the last Stock Pick of the Day video. I do these Monday through Thursday, so I don't put them out on Friday. But don't forget to tune back in for our Sunday morning portfolio update. We are going to take a look at Applied Materials. This is out of the information technology sector. And if you have not done so or you're new to the channel, go ahead and hit that thumbs up down below if you find any value in this content. Make sure you're subscribed. Hit that subscribe button. Join us on this journey to financial freedom. Join the Vested Interest community. Hit that notification bell so you're notified whenever we put out any new content. And drop a comment down below. Let me know what you think of Applied Materials. Is it in your portfolio? Is it one you're watching? Is it one you're selling or avoiding altogether? Would love to hear from you in the comment section down below. This is the vested interest stock screener. This is how I look at a company on a high level to see if I'm interested in investing. If it meets a 5 of 8 or 6 of 9, if it's a financial company, it goes on my watch list. I do more of a deep dive into the financials, come up with a discounted cash flow analysis for what I'm willing to pay, and then wait for the company stock price to align with the price I'm willing to pay or a range I'm willing to pay. This is also how I look at a company on a high level that's already in my portfolio to make sure it's still meeting some of the investing criteria that I've set up. And it's how, most importantly, how I set up these stock pick of the day videos. So we're going to run through these metrics here. And let's jump back into Applied Materials. And if you want to know more about this company, you should check them out at www.appliedmaterials.com. And that is where you should start out with any company. Understand the company, what they do. That's www.appliedmaterials.com. That is their homepage where I pulled this information from. We are the leader in materials engineering solutions used to produce virtually every new chip and advanced display in the world. For more than 55 years, our innovations have improved the lives of billions of people around the globe who may never know us by name, but who rely on us every day as they interact with technology. The world's brightest minds, visionaries, engineers, scientists bring their expertise in materials engineering, come together at Applied with a collection of diverse opinions, experiences, and backgrounds to make possible better ideas and breakthrough innovations. Our innovations make possible a better future. And if you go to their homepage, you could basically click on, display technology, semiconductor technology, solar technology, roll-to-roll technologies, and see more about it. I did clip out some of these. What it really looks like is this is the company that comes up with the manufacturing process for these chips, these semiconductors, displays, solar, roll-to-roll. So they are kind of building the equipment that builds the material that these companies sell inside our computers, cell phones, televisions, anything with a screen, laptops, anything like that. They are the manufacturing scientists that figure out the manufacturing process and provide the equipment to manufacture. And then again, you could click on each one of these and get in deeper detail. You can see here, this one's highlighted. If you were to click on the blue, go to Applied Materials, and you could get into each one of these, how the equipment works, what it's used for. But this gives you an idea. See, this would be a part of a manufacturing process, right? AKT E-beam array test. So that'd be where they put the equipment in that AKT E-beam array and do the testing on it. AKT beam review. So that's probably going over the design criteria and making sure it meets the design criteria. But again, there are pages and pages, hundreds of these different pieces that you could go into and look at and see what all Applied Materials is involved. But broken down into a few technology, like I said, display technology, semiconductor, solar array, roll-to-roll were the ones where they broke it down into, and then it's subcategorized by that. A lot of good information and a lot of information on this particular company at their webpage. Now, the reason we're taking a look at them down to 2.79% on the day, we are talking about Applied Materials, ticker AMAT, close out the day at $194.32. 52-week range as low as $109.15, as high as $214.91. So they are closer to their 52-week high than their 52-week low. Market cap of $161.46 billion, a beta of 1.58. So they are more volatile than the overall market. So you could use that volatility to your advantage and be picking this up as they pull back closer to their 52-week low, right? Pick them up whenever they're on their downswing and use that volatility to your advantage. But being more volatile, that means you are going to see more ups and downs with this company. So if you're not looking for something with a lot of volatility, this one might be one to avoid. I know some people like to avoid volatility in their portfolios. Personally, I use it as a buying opportunity. I don't want real high volatility, but I don't mind a little bit because, like I said, you can use that volatility and buy on the low points and use that to your advantage. Price to earnings ratio, PE ratio, 22.89. That doesn't seem very high for a company like this in the technology sector, especially if they are providing a lot of the processes for building semiconductor screens. All these different companies use to make the products that we use on an everyday. Well, I mean, I'm recording this video on my laptop as well. So I mean, we use it every day. We walk around with cell phones. Everyone has one. I have two, one for work and one for my personal use. My kids have, iPads that they get from school now. It's just amazing how much technology everyone uses in their everyday lives. So these companies aren't going anywhere. If anything, they're going to get bigger and produce more products that we use. EPS sitting at $8.49 per share. Earnings date May 16th, so coming up next month. Forward dividend is $1.60. Divide by 4, they are a quarterly payer. Very low starting dividend yield here, 0.8%, right? So this is much lower than I typically look at. This is, in my opinion, more of a growth company that pays a bit of a dividend, like a Microsoft, for example. Ex-dividend date, May 22nd. Looks like they're going to pay out on June 13th. 1-year target, $208.62. So according to Yahoo Finance, where I pulled this information from, they see some slight price appreciation in the stock price here over the next calendar year. So again, might be another reason to maybe look for more of a pullback here. Now we're going to go into statistics. If you were to go over here to Yahoo Finance on the left-hand side, you'd see a lot of different tabs you could click on: statistics, analysis, financials. For this particular purpose, to look at dividend yield theory, we're going to look at statistics. We're going to go down to dividends and splits. We're going to look at their 5-year dividend yield average of 1.06. We're going to compare it to its current 0.8. And since it is lower, the current dividend yield is lower than their 5-year average, that speaks to some overvaluation on this one. So dividend yield theory says this one needs to pull back some more, and that would be a much better dividend yield if you could get it in the 1.2, 1.3 range, even 1.1 range. That would be higher than their average and speak to undervaluation. But just one more reason to look for more of a pullback on this one. Payout ratio is extremely low on this one, 14.35%. So they have a lot of room, even though you're starting out with a very low dividend yield. And like I said, it depends on where you buy it. It looks like they're even pulling back a little bit more in the after hours. So again, you can use that volatility to your advantage. Try to get it closer to this 52-week low. Increase that starting dividend yield, and we'll see how fast their dividends are growing here in a little bit. But they have a lot of room to increase this dividend payout, 14.35%, very, very low in the teens. Now we're going to take a look at free cash flow. We want growing free cash flow. Typically, if a company has growing free cash flow, they have growing dividends to match. Going back to 2020, $3.3 billion. 2021, $4.7 billion. Looks like a little bit of a drop here in 2022 to $4.6 billion. 2023, $7.5 billion. Overall, nice, steady, growing free cash flow. Let's look at the repurchase of capital stock, because even though it looks like there was a bit of a drop in free cash flow in 2022, they increased their repurchase of stocks up to $6.1 billion in stocks instead of the 3.7. So 649,000 here, 3.7 million here, 6.1 million here, 2.18 million. So big jump up in 2022. So really, even though it looks like a drop in free cash flow, that can more than be accounted for in the increase in the repurchase of their capital stock here. So again, nice, steady free cash flow growth as well as repurchasing their stock. Very good combination here. Really like the numbers so far, other than the valuation currently. Again, I'd love it closer to this 52-week low here. Now we're going to jump over to stockanalysis.com. This is another site that I like. You pick any sites that you want. Just make sure you're not just blindly following one site only. Make sure you're looking at 2, if not 3 sources for information, so you make sure the information is accurate and up to date. That's the whole reason behind looking at more than one. And 23 stock analysts have taken a look at this. They call it a consensus buy, though it is right on the edge of a strong, or I'm sorry, they call it a consensus strong buy, right on the edge of a strong buy and a buy. So if you were to go to stockanalysis.com, you could click on each one of these, this being a strong sell, hold, buy, strong buy, and you could see out of the 23 analysts how many are each saying which. This would definitely lead me to believe more on the strong buy and the buy than hold, if any are in the sell, right? It's probably all hold or buy and strong buy here. Now, they do have a low estimate of $140. That would be closer to where I would be interested, $140 or even lower if you can get it there, but $140 would be much better buy-in price there. You'd definitely be in the 1.2, maybe even 1.3 dividend yield range if it was to drop another, $54. That would be a 27.94% decrease from where it currently sits. Average estimate of $201.35, which would be a 3.63% increase from where it currently sits, and that's pretty close to what we saw with Yahoo Finance. And high estimate of $260 would be a 33.82% increase. And all the while, if you were to buy them now, you could collect that, 0.8%, less than 1% dividend yield. But at least they are giving you something, and with such a low dividend payout ratio, hopefully they're going to increase that fast. And we'll see what their current dividend increases are currently. Now, statistics, we're going to look at return on equity and return on invested capital. I like 10% or better here. Return on equity, smoking high, 45.4%. Return on invested capital, same thing, almost 3 times what I'm looking for, at 29.56%. EPS growth, I like 5% or better. Double that at 10.67% for this one, forecasted over the next 5 years. Very good numbers. Revenue growth forecasted at 6.10%. Overall, this company has very, very good fundamentals so far from what I've seen. I just don't like the buy-in price, but this definitely is one that I'm going to look at a little bit further and might be going on my watch list here. Now we're going to take a look at the dividend. Again, they are a quarterly payer. They pay out in the March, June, September, December timeframe. Payout ratio, they're saying 18.82% here from stockanalysis.com. Yahoo Finance had it at 14. Either way, in the teens, very, very low payout ratio. And they are raising that dividend growth extremely aggressively, 23.64%. Now, they do only have 6 years of growth to go on, but that's all right. All companies have to start somewhere. Buyback yield to 1.41%, shareholder yield to 2.2%. Again, very good numbers overall. Going back to 2021, November, they were paying 24 cents. August 2022, May 2022, they raised it up to 26 cents. Raised it up again May 2023 to 32 cents. And it looks like they're going to raise it up again in May up to 40 cents. So I would expect another dividend raise in May of 2025 to maintain this dividend growth. So overall, very aggressive dividend growth, very low payout ratio. But the only negative is a low starting dividend yield. Again, I would look at this more of a growth company that pays a dividend with a nice fast growing dividend growth. So some of you younger people out there, or some of you out there who are looking for something in the technology sector that pays a dividend that may grow that dividend fast over time, this might be a good one to watch and look for just a bit more of a pullback. In my opinion, I'd want it at least above their 5-year average. 1.1, 1.2% dividend yield would be where I would start to look at getting in this one. That's just my opinion, but that's what I would be waiting for. Well, that is it for this one. Let me know what you think of Applied Materials. As always, appreciate you stopping by. If you haven't done so already, don't forget to show me some love. Hit that thumbs up, ring the notification bell. Most importantly, hit that subscribe button. Join us on this journey to financial freedom. Join the vested interest community. And drop a comment down below. Let me know what you think of Applied Materials. Let me know what you think of the video series. I do personally read and respond to the comments. I'm always interested to read your questions, opinions, or suggestions for future topics. So if you have a company like Applied Materials you'd like me to cover in the Stock Pick of the Day series, drop it down below, and I'll try to work it into the rotation on a day it pulls back. I do not cover tobacco stocks, and I do not cover non-dividend stocks. So make it sure it's one of those. Even if they pay a low dividend, like Applied Materials, I will cover it. Well, this is Shane signing off, wishing peace and prosperity to you and yours. And remember, financial security comes to those who take a vested interest. Hey, thanks for stopping by. Hope you've had a great week, and we'll see you in the next one. I'm not a financial advisor. Nothing in the presentation should be considered financial advice. I'm only sharing my opinion. Investing journey for educational and entertainment purposes. Investing involves risk and tangible money. So never invest any amount you're not comfortable losing. Always do your own research. Invest based on your situation, circumstances, and select criteria, or seek the advice counsel certified financial advisor.